Hello students, greetings to you all. I am Dr. F. Sweetlyn Christy, Assistant Professor, Department of Commerce, Professional Accounting, the Standard Fireworks, Rajaratnam College for Women, Sivakasi. Hope this smart session brings you lot of information you need. Today's topic is Audit of Insurance Company. We already know about what is audit, what are the procedure and the types of audit. Straight away get into this topic. So today's objective of this sessions are, first one, to gain a clear understanding of the fundamental principles of insurance audit. Second one is to familiarize with the legal and regulatory framework relating to the insurance audit. Then third one is to examine the key audit aspect in the profit and loss account of insurance company. Fourth one is to understand the duties and obligations of an auditor in insurance audit. Then fifth one is review the challenges in auditing insurance companies. So introduction. An insurance audit is an examination of an insurance company's records, processes and systems to ensure compliance with the regulatory requirements, industry standards and internal policies. Insurance audit plays a critical role in ensuring the financial stability and integrity of insurance companies, protecting policyholders and maintaining the public trust in an audit of the compliance with the regulatory requirements to ensure transparency, accountability and financial stability. What is an insurance audit? As per section 12 of the Companies Act 1938, the financial statements of every insurer are required to be audited annually by an auditor. According to IRDA Act 1999, every insurer in respect of insurance business transacted by him and in respect to his shareholders' funds should prepare a balance sheet, a profit and loss account, a separate account of receipts and payments and a revenue account in accordance with the regulations made by the IRDA at the end of the financial year. Objective of the insurance audit. First one is verify accuracy of premium income, claims, reserves and reinsurance. Second one, ensure compliance with IRDA, that is Insurance Regulatory and Development Authority of India, or respective regulatory body rules. Next one, check the solvency margin and financial stability of the company. The next one is detect frauds, errors or misstatements. The next one is evaluate internal controls, especially in underwriting and claims settlement. Next one is ensure fair presentation of financial statements. Then some of the important audit points in the insurance company profit and loss account. First one is verification of premium. The premium collection are credited to a separate bank account and no withdrawals are normally permitted from that account for meeting the general expenditure. As per the policy of the insurance company, the collections are transferred to the regional office or head office. No risk shall be assumed by the insurer without receipt of premium according to the section 64 VB of the Insurance Act 1938. Verification of premium is of almost important to an auditor because insurance premium is collected upon issuing policies. It is the consideration for breaking the risk by the insurance company. The auditor should apply the following procedures. Before commencing the verification of premium income, the auditor should look into the internal control and compliance which are laid down for collection and recording the premiums. Then cover note should be seriously numbered. Then auditor should check whether the premium registered have been maintained chronologically, giving full particulars including GST charge as per the acceptance advice on the day-to-day basis. The auditor should verify whether the figures of the premium mentioned in the register tally with those in the general register. Auditor should verify whether the installments falling due on or before the balance sheet date, whether the received or not, have been accounted as per the premium income as for the year under the audit. The next verification is verification of claims. The auditor should obtain from the division or branches the information for each class of business. The auditor should remittance the total number of documents to be checked, giving due importance to claim provisions of higher value. The claims under policies comprise the claims paid for losses incurred and those estimated or anticipated claims pending settlement under the policies. Settlement of cost, the cost of claims includes the surveyor fee, legal expenses, etc. The claim account is debited with all the payments including repair charges, firefighting expenses, police report fees, survey fees, amount credited by the court, travel expenses, photograph charges, etc. The auditor should check whether the provision has been made for all unsettled claim and whether the provision has been made for only such claims for which the company is legally liable. Then check whether the provision made or normally not exceeds the amount insured. Then check in the case of co-insurance arrangement, the company has made provisions only in respect of its own share anticipated liability. Then check claimed paid should be duly sanctioned by the authorized concerned. Then next one is verification of commission. The remuneration of an agent is paid by the way of commission, which is calculated by applying a percentage to the premium collected by him. Commission is payable to the agents for the business procured and is debited to the commission account on the direct business account. The insurance business is solicited by the insurance agent. The auditor should verify the voucher disbursement entries with reference to the disbursement voucher with copies of commission bills and commission statement. Check whether the vouchers are authorized by the officers in charge as per the rules and income tax deducted at source as possible. Test the check correctness of amount of the commission allowed. Then to check whether the commission outgo for the period under the audit duly accounted for or not. Then verification of the operating expenses. All the administrative expenses in an insurance company are broadly classified under the 13 heads mentioned in the schedule 4. The auditor should check the expenses exceeds the rupees 5 lakhs or 1% of the net premium, whichever is higher, should be shown separately, and expenses not directly relating to insurance business should be shown separately. For example, the expenses relating to investment department, bank charges, etc. The next topic is auditors' responsibilities. Auditors hold specific responsibilities while conducting an audit of the insurance company. First one is independence and objectivity. Auditor must maintain independence from the insurance company to ensure impartiality in their assessment. Next one, compliance with standards. Auditors are required to adhere to the standards set by the Institute of Chartered Accountants of India, that is ICAI, and any specific regulations prescribed by the IRDA. Then third one is risk assessment. Auditors must perform a thorough risk assessment identifying areas susceptible to fraud or misstatement and develop audit procedures accordingly. Then last one is reporting. After completing the audit, auditors must issue an audit report that includes their opinion of the financial statements, highlighting any significant issues, deficiencies in internal control or areas requiring management attention. The next heading is challenges in auditing insurance company. Auditors come across various challenges while auditing insurance companies. First one is complex financial instruments. Insurance companies often deal with complex financial products and derivatives, making it difficult to assess their valuation and risk exposure. Next one is regulatory changes. The constantly evolving regulatory landscape can complicate compliance audit and necessitate continuous updates to auditing practices. The next challenge is actuarial assessment. The reliance on actuarial assumptions for reserves and liabilities can introduce significant uncertainties, making the audit process more complex. Now we have come to the end of the session. I hope this session give you a lot of information added your lessons. Thank you.